this interest rate will have global impact, Indian markets are not an exception. I believe this trend is going to reverse in 2024. Slowly, US is losing its charm as world leader. World is not taking Biden or Trump seriously. Many countries in Asia and Middle East may balance their geographical portfolio and move towards de-globalization. Even though AI is a buzzword in 2023, it is not adopted properly. What will happen in 2024? When it comes to managing inflation, interest rate, overall economy, India has done better than US in last 1-2 years. Hello everyone. Welcome to Keerthi's FinFo NRI community. I'm CS Keerthina. I live in Dubai. I run The Consultancy, a firm which is specialized in NRI services. I've done my CS from India, CMA strategic level from UK, and I'm also a SEBI registered overseas MFT. Every week, I bring an explainer video on topics related to NRI issues in this channel. If you are looking for finance, tax, FEMA, and investment topics related to NRIs, please subscribe this channel. Today's video is important, not just for NRIs. This is relevant for anyone who is interested in global finance. See, we are heading towards the end of 2023 and in less than 2 weeks we will be welcoming 2024. So in today's video, I am going to discuss 5 trends which as an investors we must observe in 2024. Observing these 5 trends closely can help us in portfolio allocation, means where you decide how much money you need to put in each asset class, or geographical diversification, that means in which economy you want to put your money. And these things, it matter a lot while growing your money. And it can also provide you emerging investment themes in this ever-changing world in 2024. So stay tuned till that. The first important trend you need to keep an eye on is interest rate trajectory. Globally, the interest rate had been going up and it stayed in the higher side for almost 2 years. I believe this trend is going to reverse in 2024. The market may transition from a place where it is witnessing and responding to the series of aggressive interest rate hike cycle to interest rate decline. But remember, this is going to happen only in later half of 2024. Interest rate decline may not come in the same aggression that it has gone up, but in 2024, rate hikes will be stalled and rate cuts will start. Even in recent meeting, Federal Reserve didn't hike and it kept rate as it is. Fed is closely watching its target inflation rate of 2%. But let me tell you, market is usually forward-looking, means it has already priced in the probability of future cuts. That in turn translates into new market cycle. Even in India, RBI follows the same path. What I mean by this? It means 2024 might be the time that you think beyond your fixed deposit, your treasury bills, and consider equity in your portfolio, both in US as well as in Indian market. See, at present, fixed income, these are stable securities, right? So it might look really attractive with 5 to 7% yield. But remember, when you are just buying this and holding on to this, you have a huge opportunity cost of missing out the potential gain in equity if the macro picture improves in 2024. So it might be the time for you to park your emergency funds, money required for the short-term goals in FT and other fixed income securities, to go overweight on equities in long-term portfolio. People who already have equity in their portfolio can think of rebalancing the allocation. People who have not started investing in equity, you should seriously consider adding equity in your long-term portfolio now. If you don't know how to build long-term portfolio, don't worry. Our firm The Consultancy can help you. Along with my CS and CMA, I am also a SEBI registered overseas MFT. So I with my expert team can help you to invest in equity through mutual funds in India. If you are interested to invest through us, book your 20 minutes free consultation using the link given in the description. I truly believe the next 10 years in Indian equity, it will do really well. You should not miss this wealth creating opportunity through equity. Generally, with the rate cuts, there will be a fresh rally in equity market. When the rate cut happens, money moves from bonds, FDs to equities. Remember, this also comes with the caution. Let me tell you, especially in US, where inflation is still an issue. If the Fed reduces the rate without support of economic fundamentals, it might reignite the inflation, and this might affect the market performance again in US. So keep a close eye on the US interest rate cut as well as other economical fundamental factors in US. When it comes to managing inflation, interest rate, overall economy, India has done better than US in last 1-2 years. However, US interest rate will have global impact. Indian markets are not an exception. So in 2024, keep a close eye on it. Second trend which you need to watch in 2024 is recovery of world economy. Though GDP numbers were stronger in 2023 in many of the economies, OECD is still skeptical about the world recovery. So it has lowered the projected world GDP growth for 2024 from 2.9 to 2.7%. With keeping inflation under control, world might move towards 3% growth rate. But again, there is an interesting data here. Emerging markets like India continue to be the global growth driver. This table shows why G20 countries, where India is at the top, followed by Indonesia, China, Saudi Arabia, are going to be the growth engine to the rest of the world. Now you know where the growth lies, right? Still, US is the highest, it dominates. But fundamentally, US has many things to worry. Finally, there is some indication that inflation is coming down. But for US, the biggest threat is debt to GDP. It is abnormally high, that is 123%. It creates pressure on the government at some point on their fiscal policy. Moody in December has lowered the outlook for both US and China from stable to negative, mainly because of the debt. It said in China, it is the debt laden state run companies, local governments. They have increased the risk structurally to the economic growth. And in US, Moody had attributed this to fiscal instability. It has pointed out some serious long-term concerns over American economy. Whereas S&P Global Rating has predicted robust economic growth for India, estimating 6 to 7% annual GDP expansion between 2024 to 2026. The reason it's cited is decline in the bank's weak loan and improvement in the asset quality, sound corporate balance sheet, structural improvement in economy. As a rational investor, you need to consider only these fundamentals in any economy, right? Especially think when government all over the world are facing this climate change risk, aged population, it is their current spending which decides their future. Remember, it should not fuel the debt even in an economy. In this case, again, look at the strong fundamentals in economy while investing for long term. Any government, for this matter, which has a clear fiscal framework with a clear revenue source, spending goals, which are well planned, well positioned to address the future shocks, emerges as a winner. Only this can ensure stability in the long run. So at the end, it is about strategy, execution, structural reforms, which brings pre-pandemic level of growth in any economy. The third point that you need to watch out is de-globalization. During pandemic, many companies felt the heat of supply chain disruption. To remain resilient, manage this risk well, many companies have tried various strategies, digitization, maybe even near sourcing. That means it is almost similar to outsourcing, where they are picking up the destination which is near to them to manage overall cost, to reduce it or to manage the shipping cost, etc. But see, when the inflation remains sticky, customers are price conscious. Cost control itself becomes a matter of top priority. This again has come into debate, de-globalization, when Ukraine-Russia war has started affecting the supply chain. And with the recent Hamas and Israel conflict, petrol price rising up, building pressure on the emerging markets, this is again in the picture. Just think even in Asia, when China is attempting to take control of Taiwan just to control the massive supply of chips. Now, don't you think that these geographical conflicts have a lot to do with the deglobalization trend? Let me explain you again. Imagine, as investors, when we invest in top Nasdaq companies, where top companies in Nasdaq, even like Apple, for example, they are heavily dependent on the chip supply from Taiwan. What will happen if China attacks on Taiwan? So for this reason, government in US, they started chip manufacturing plant in Arizona in order to achieve independence in supply chain, which is not that easy. Many countries have started this kind of trade protectionism and managing all by themselves, self-reliance, including in India, they talk about Atmanirbhar Bharat or self-reliant India. with a focus on economy, infrastructure, system, demography, demand. The result is clearly visible in reforms in financial system, taxation in India. Now tell me, analyze everything in this kind of self-reliance trends as well as geographical conflicts, pressure on the companies, economies, its leaders, why globalization has come into picture. The main vision of the globalization was increased global opportunity, reduced cost, collaboration in various fields, maybe it is research, technology, etc. We can clearly see the trend reversal. It has actually started from pandemic, now it is becoming clear. It may not be in complete sense, but there is at least decoupling from powerful economies. The national leaders may not use the word deglobalization openly. The push for the domestic production will be seen openly in US and India. If you look at closely, post COVID, this is happening. But in 2024, where the general elections are due, you will see this even more. Deglobalization will be sold to the public as national pride. Elected government, both in US and in India, they'll push for aggressively and they will try to achieve the result here. So if you are investing in Indian equity directly, themes like PSUs, defense, manufacturing, infrastructure will be talk of the town. In addition to this, 2024 could reshape the world order. Trust me. Keep an eye on the new elected government in US. Slowly, US is losing its charm as world leader. World is not taking Biden or Trump seriously. It's looking for a leader beyond Biden and Trump in 2024. But will US voters also think in the same way? This will make significant difference in the way US is perceived around the world. Different countries have already started to question the dominance of US dollar as a payment currency at least, and slowly it might move to reserve currency also. If there is a weak leadership in US, the questions about the fundamentals of US economy will rise even more in 2024. Like we as investors, we always rebalance our portfolio. Many countries in Asia and Middle East may balance their geographical portfolio and move towards deglobalization. Remember, change in geopolitical relationship. Trust me, this can result in financial opportunity as well as bring its own challenges. So this can directly have an impact on us. Keep an eye on them. Next is the fourth trend that you need to focus: AI or artificial intelligence. This may look like a tech trend, but it has direct correlation to your finance. Even though AI is a buzzword in 2023, it is not adopted properly. What will happen in 2024? I feel there is no choice. World will decisively embrace and adopt AI. AI will help companies to reduce the cost, increase efficiency. Whether it is about automating repetitive tasks, handling customer service, or even in the place of search engine, we are seeing higher use of LLMs or language models. This year, 2023 itself, AI has already been helping people to improve their productivity. Who doesn't use ChatGPT, right? And now Google had released Gemini. So when generative AIs can generate such quick, unique, close to perfect output based on input and apply learned knowledge efficiently, machine learning algorithms can analyze vast set of data. This is going to cost many of the jobs. So it is a time to update the skills with AI. AI in 2024 is going to help in medical field, health sector also, because it can assist in rare disease diagnostic, treatment, robotics assisted surgery, drug development, research, etc. Every sector will adopt this. Corporate companies will increase the adoption of AI for cost saving, transforming existing line of work, or implementing the strategies also. See, let me tell you, when a theme moves beyond being a concept where initially all are doubting its adoption, it crosses a stage where it is hyped and ultimately it becomes a reality. We, as investors, should get into this trend. 2023 is the year where AI has crossed all this skepticism stage. In 2024, it will be adopted massively. We must play this theme in our long term portfolio. As per the report by Forbes, AI market size is expected to increase from 86 to 407 billion US dollars just by 2027. Look at the potential. 64% of the business believe that AI can increase the productivity. They also believe in the potential to transform the business. AI is expected to transform, revolutionize various industries by 2030. So its growth rating is just stunning. It is 37%. So, in case if you are not owning any AI related technology stocks, then it is a time to think about it. In 2024, new era of tech cycle is starting. The last trend which we are going to discuss is renewable energy. Like AI in 2024, world will move towards green energy and escalating the transition to electric vehicles. For addressing the climate change challenges and reducing the dependence of this expensive fossil oil, this is inevitable. But what it means for investors like I and you? Usually, these energy companies are having high debt for expansion, operations. So, debt becomes their financing source, and with this rising interest rate, their stock price always falls down. Because, unlike oil companies where the supply can be cut and the capacity can be increased by tapping on drilling to the existing reserves, clean energy companies need to borrow heavily to operate. That's why this cycle they have suffered. So now it's wise to look at the government strategies, initiatives here too when you want to add this theme in the portfolio. In India, government is taking proactive steps and the results are clear. It has attracted FDI of $251 million as an investment. The cost usually is the main barrier in adoption of renewable energy. India has reduced the cost of solar power by 84% in last 13 years, cost of wind power by 49% in last decade, whereas the increase in the solar power installed capacity is 30x just in 7 years. India stands as the fourth player in renewable power capacity addition. Even UAE, it had spent $100 billion in last 15 years and also pledged another $100 billion to be used by 2035 on this theme. US and Europe is also leading in the sector. 2024 could be the year to add some stocks related to energy to your portfolio and close your eyes, hold it for a decade. These are 5 trends. What I feel will influence the financial journey in 2024. What do you think about it? If you're spotting any other trends that can shape our finance, please don't forget to discuss it in the comment section. If you like this video, please share it with your friends and press the like button. That's for today. I'll meet you again with another video. Till then, bye bye.